Ladies and gentlemen of the crypto space, we're live on a Friday, January 14th at 11:33 a.m. And it has been a big week. A lot has been going on, and I'm starting to put some puzzle pieces together with regard to the directionality of the market. I got my eye on the macro financials as well. So I really think a lot of my foundational narratives are rock solid, meaning I'm more interested in where capital flows during a risk off event, and there's plenty of changes compared to historical norms. Bonds might not be the direction of capital during risk off. There's other places to put capital. There's just so much capital in the system, which leads to unprecedented capital flows during extraordinary times. Sure, you have overtones of, yeah, that some of the same shit could go on, especially for folks that are not ready to think different. So they're just stuck. Maybe they're 50, 60, 70 years old and they want to do things the exact same way. But there's just so many new aspects to the overall system that are truly disrupting historic normalcy. I mean, Kathy Woods posits that some of the large tech plays are being treated as cash. They're clearly a store of value in some regard. So, in a risk-off event, what do you think is going to get sold for a source of, as a source of to liquidate capital, collateral, so that you can now have cash to service a margin call or pay off some debt? All the tech shit's going to sell off. It's been run up so high. When it comes down, it's going to be liquidated and the capital is going to flow somewhere. And that is where my attention is. Where's the capital going to flow? Even if you have traditional risk off into bonds and dollars, the capital is going to go somewhere and relatively quickly, as long as the consumer prices are elevated and there's prevailing negative real rates, even though we know there's distortions and perspective applied. Looking at Jeff Schneider's work and Stephen Van Meter, that maybe a lot of what's going on is illusory and smoke and mirrors, and maybe we will see a fair amount of capital destruction and a deflationary impulse, but ultimately capital is going to flow somewhere. And we've seen just stuff run up so high. When it comes down, it's going to go somewhere else. And I have no inclination to think interventionism is going to cease. We've seen tip of the hand that deflationary impulses is their primary fear time and time again for the last 20 years. They're just afraid of deflation. And now we're seeing technically they're not really afraid of inflation. At least that's what we've seen thus far. Because if they were really afraid of inflation, they'd be vulgarizing the crap out of this stuff. They'd be cranking up interest rates, but they can't, which is why I tend to lean towards the way Luke Rubin looks at the market. They can't do 2%, 3% Fed funds rate. They can't. The system won't tolerate it. They don't have the GDP. So we'll see how things unfold, which is why I like the crypto space. This is not 2017. This is not buy an asset and sell it when it's higher. This is not this shallow, pathetic way to look at a market. This isn't a capital raise, an ICO, where you're speculating that a product is going to be launched. You've literally seen the entire DeFi space launched product after product after product, and these aren't just like test products. These are products that provide financial services, disintermediated financial services. These are literally enterprise. These are enterprise grade applications. That's crazy. There is no other way to look at a lot of these protocols other than as a full on enterprise grade application. You might as well be buying, I don't know, an Adobe product. That's the quality and function of these types of products in the crypto space. Full on enterprise applications. So I wanted to talk about tokenomics a little bit because everyone's hot, obviously, on what Andre's cooking up and Daniel, and we've seen what the AnySwap deal. They got a lot of corporate money, and AnySwap got slurped by Multichain, and Andre's coming out with a new exchange. We've already seen that hat tip. I took a look. took a look at the new repository that he posted. Is basically a token and peripheral contracts related to position management that have obvious expression of an AMM, an exchange, where you have deposits, pairs, gauges, voting, and native bribes. So, what has been shown thus far has a native bribe component. And that plays into the way I'm seeing tokenomics evolve. And that's why a lot of my focus right now with regard to the speculative and growth part of my portfolio is latching on to seamless cross-chain interop. And what is expressing the best potential for seamless cross-chain interop right now? Frankly, there's two positions. I'll digress into this right now, and I want to get back to the tokenomics, which is how I got to this train of thought of late. Um, uh, Multichain and AnySwap is the leader by far. There's plenty. Synapse is another one. Hop Protocol. There's smaller ones here and there, but Multichain is the behemoth in the room with just a huge amount of capital. Let's pop it over to the main screen and I'll show you guys what I'm talking about. I mean, seriously, they got 7.4 bill in deposits, and they've done 40 bill in volume, and the integration. I mean, they even got Syscoin in here, which catches my fancy, and a lot of other chains that are relatively obscure, but they're all meaningful because it's a big world, and not everyone's going to use one chain. There's going to be opinions and various expressions by different nationalities and maybe even faiths. So there's no one chain to rule them all. But what you want is a seamless cross-chain experience. And what facilitates a seamless cross-chain experience? This. But others. And so there's one other. The only other protocol. Okay, so let me elaborate why I say this and one other. Because when you hit a narrative, there's going to be a lot of protocols that are trying to deliver on a narrative. You can't own everything you want to own. If you try and own it all, you're going to be too spread thin. So you need to concentrate based on rational characteristics. So clearly, you concentrate to the one that's most likely to outperform. But there's one other protocol that has a bit of a moat, and that's Ren. Um, I have my historic dark nodes, the Ren VMs, because it's not just cross-chain interrupt. They literally have a damn network of VMs. That's crazy. So it's not. They could do so many more things other than just what they've historically been doing with private key management. That's all it is. Um, so now H to H, so they have the cross-chain interop narrative that is slowly taking form. It's been taking form for quite a while now, and let it take its time. Their moat is their network of VMs. So I think that is rational. But this is clearly the leader. Multichain is clearly the leader with regard to seamless cross-chain interop. And that was one of my 2022 narratives that I talked about in late December 2021. And clearly it's been on my mind, but this is really a manifestation of everything that I've been seeing. And it took a little bit to put the puzzle pieces together to point to this being the crux or whatever the heck Andre and Daniel and the rest of the team are cooking up with regard to an exchange. There's definitely new token, new deposits, new pairings. I don't have all the puzzle pieces, but this is the foundation of it. This is what would facilitate cross-chain swaps. So there's probably a robust layer that they want to put on top of it, including gauges and voting and bribes. So how it all pieces together, I'm sure it's going to be brilliant. But we don't have the full picture yet. But we're getting there. Let's take a couple of comments, and I want to talk about the fundamental tokenomics of where things came from and where they're heading. RY wants me to talk about that as well. Happy Friday, Dopex, DPX, RDPX, live. Of course, Tetra killed it on RDPX, 100x on that bad boy. Crypto Bad Stan, Igor, Tapsy. Thank you, Tafsy. Crypto Best, did you catch up the up only with Tetra? Yeah, it's good stuff. Good stuff. Um, Victor, good morning. Chris, how about the puzzle pieces of Multi Sushi, Keeper, Abra? What is solidly and how to play? Premature to think about what solidly is going to be. Um, it's going to be an AMM. Okay, it's going to be an AMM. What's the best position in it? I think there's a lack of clarity. So the question became whether that lack of clarity was reason to have patience and wait, or go to the underlying technology at play, which is the narrative, seamless cross-chain interop. Sure, there could probably be something extremely lucrative with regard to the AMM level, but I don't. I was. It's not that it wasn't impatience. It was that when I saw the connections that pointed to multi-chain, that's all I need. I don't need to chase. I don't want to catch FOMO. I have no interest in that shit. But what I rest on is my convictions and my narratives. So even if the damn AMM is ridiculously freaking novel and awesome, how do you go cross chain? How do you go seamless cross chain? And that's this. And my goal always is to own pieces of infrastructure. And this is the ultimate piece of infrastructure. Ultimate. So be careful. The run up in price is incredible. Somehow I caught my position, but I started seeing the puzzle pieces at about 16. And that was basically a decent falling wedge, I guess. So at about 16, it's up about 100% in like 3 days. The history of it is 2021. So this thing was down at $1. If you go to CoinGecko, you could see some historic data that predates the Phantom token, and this is where the most liquidity is. This is any, obviously. Let's take a look at any on Sushi. Maybe there's more historical data. Let's go out to the daily. Mhm. Yeah, I mean, it was $1. It was $1. It's up 30x in 2020. It was lower. It's up thousands and thousands, 10,000, 15,000. And there was no narrative back then. You don't buy things unless you have a solid narrative. There was no way to know the way the system would evolve. I guess that's really early if you had that foresight, because clearly I've had this narrative of cross-chain interop. That was the whole point of Ren, and that's why I took that position back in early 2020. But this was not wasn't the clearest narrative, and that's okay. That's okay. The price action did not depict that anything was changing for all of 2021. It just there was no momentum, there was no traction. I mean, cross chain really took off in Q4 2021, where Avalanche was hot and Phantom was hot. I don't know the BSC. There was never real excitement about that cross chain experience, but people wanted to get capital on Avalanche. People wanted to get capital on Phantom and Arbitrum. They wanted to bypass the 1 week withdrawal window, so Arbitrum was a pain in the neck. But this is a narrative shift. That's a heck of a narrative shift. I mean, it's literally above the fifth bar of the fork. That's absolutely extraordinary. Let me adjust this, make sure it's on point. Yeah, that's crazy. This is an expression of a change in narrative, a significant change in the story of the way people are seeing the asset. You don't see repricing like this with such buys at the top. This is not necessarily like a ridiculous uh, shooting star, because that would be an expression of a rational exuberance. I would say this is more an expression of repricing, reevaluation of what the heck this thing is. Let me go through some comments. I want to talk about the tokenomics. I keep saying. Roberto, Captain of my captain, a pleasure. Killis, good morning. Lewis, my brother, how are you? FYI, there's an imposter Daniel account. I'm sure there's going to be a billion of them. It's inevitable. Jefferson Lee, love this guy's content. Thank you very much. We live, baby. That's right, Tyler. Andrew, hello, Noah. Happy to be here. LFG, yeah. Love to see Noah jazzed up here. I'm always jazzed up. This is exciting times. This is incredible tech. I'm a software dev myself. Clearly, uh, I'm not building any contracts of late. I never got into it, but this stuff is right up my alley. I understand the nuances and subtleties of software, and this is just quite appealing to me. It's why I do what I do. What's up, Rupert? Live W, are you going to have any interest in rotating some capital to Near Aurora? No, I don't need to. What I know is that Near is integrated into the BSN, and the BSN hits the China narrative. So that's cool. So there's probably something there. The narrative isn't clear to me. It's clearly going to be an L1 that's probably going to have a lot of activity in the next 5 to 10 years. So that's pretty cool. How much you're in stables, if at all? Trivial amount. Dennis, hey, no, any thoughts on 100 Finance? Not at the moment. FTM, largest multi-transaction 6x ahead of BSC. There you go. And I'm pretty sure they're close or comparable or maybe past Avalanche. But man, Phantom and Avalanche, it's serious what they're building. Very serious. That's just my opinion. And I know a lot of Ethereum maxis would want the Ethereum chain to be the source of truth, and that's great. And that's probably what's going to happen. And you'll have L2s, you have Arbitrum and Optimism, and those are for quick transactions and EVM functionality. And then it uses L1 for source of truth. Lovely. So I expect a healthy market in 5 to 10 years with some very powerful competing networks. And that's okay. Not a damn zero sum game, boys and girls. Phantasma chain, not on my radar. Kyle, what's up with the huge spike with Annie? Well, frankly, the narrative, the cat's out of the bag. That Annie was slurped by Multichain, and Annie got 60 million funding from everyone between Binance Labs and a billion other capital allocators, and Multichain is Andre, and Andre is playing with Daniel and Sifu and the rest of the crew, and they're all building an AMM on Phantom, and the AMM is going to use multi-chain to facilitate seamless cross-chain transactions. You're going to be able to have a transaction where you have MIM on Phantom and you could buy Ethereum on Ethereum, or you know, cross-chain, one transaction. Press and click, and the transaction executes. No more swapping, no more bridging. It's just automatically done. That's what these boys are building. And that's exactly, it hits the narrative so well. Seamless cross-chain interop. Trade one asset to another asset, and it doesn't matter what chain you're on. Boom, 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 boom. Seamless cross-chain interoperability. This is literally the manifestation of one of my core 2022 narratives. But look at the price action. You got to be careful. There's vultures out there. Just because the narrative is being validated, just because there's extreme confluence suggesting continuation, you got to remember there's still sharks everywhere. Clearly, someone bought at 33. It's down to 31. But damn, if you look at the price action, you see there's a lot of sells that are met with buys, a lot of buys that are met with sells. There's a lot of arbitrage going on between Phantom and Ethereum L1. This is Ethereum L1 sushi. Um, I find that quite interesting. I've been looking at the price action lately. Some interesting patterns. I mean, it's like you got to sell and there's an immediate buy. You get an immediate buy, there's somewhat of a sell. So there's a lot of arbitrage going on, a lot of bots probably. And we'll see how this thing smooths out between what's going on in the Phantom network and the transactions that are going on in Ethereum. And frankly, the other chains, because multi is on every single damn chain. Live, do you earn multi if you stay? You earn nothing right now. So, folks, I know I talk about income streams, incoming, but this is clearly at the spec range of the portfolio. What do we know? We know basically tips of hands, hat tips. Andre basically said you get in VE multi. So inclination is going to be maybe a VE33, but a VE33 is basically the fundamental premise of an incentive system. So I don't know how multi plays into the new exchange. The new exchange asset is called like base V1. But that the token implementation, it doesn't have any overtones of an incentive system. It looks like more so position management, from what I could tell with my experience. So we still have a lot of gaps in what's going to play out. Still have a lot of gaps. Pooh Bear, I think Andre and Danny are going to be using Phantom Speed to create a base for all their multi-chain transactions. That makes sense. Um, Sol is different. Yeah, everything's different, my friend. It's okay. Uh, where was that? Sol is different focus from most of the other ones, but I'm liking the price action. Yeah, there's literally 5,000 assets that fit those characteristics. Glad to be here live. Technically speaking, could it be possible to have collateral on chain and loans on another? Uh, well, for that you need Keeper. Keeper is working on seamless, cross-chain contract calls. So in theory, yes, but you need the technology, you need the communication bridges to be able to achieve that. Um, don't get confused between any and multi-mat. Any is deprecated, it's done. Any is being converted to multi. The price action is all any because multi is literally you have to burn any to get multi. That's the only relationship there. Can you make an argument that CVX CRV is actually better long-term hold than BTC ETH? Different narrative, very different narrative. BTC and Ethereum hit store of value strong because of their disinflation and deflationary pressures, and because of their overall macro narrative and how it fits into the ideology of the ultra wealthy, the billionaires. The billionaires aren't necessarily going to invest or allocate capital to enterprise and venture capital and startups. They don't give a shit about that. The billionaires, literally, if you have $100 billion, you're like, all right, I throw a billion here, a billion here, a billion here. You want to store value for the next 100 years. It's exactly how Michael Saylor talks. So he's spot on, and they don't care. Maybe they throw around $10 million to start one of these crypto businesses, these enterprises, as I call them. Sure, but that's not where the big money goes. The ultra wealthy, the elite families. So that's the BTC, Ethereum. That's about it for the ultra wealthy. BTC, maybe Ethereum. Oh, for the ultra wealthy, going out on the Ethereum risk curve. That's what they're thinking. That's what these family offices are thinking. They're certainly not going to pile that money into like Curve CVX. So that's for us lower level casts of society. But CVX CRV, I'm going to stop the comments. I want to talk about the evolution of the monetary policy, which is the point of the stream. So we have a history of inflation in the crypto space, and clearly Curve was the epitome of hyperinflation. It launched, and we had extreme hyperinflationary decay. Now, they had the right idea with the VE tokenomics to encourage people to take Curve off the market for purposes of voting, the gauges, so on and so forth, to govern emissions. So they had the right idea, and that's the producer. So the origins of really DeFi tokenomics was a producer. It's an MMT currency creator. But if you don't have the proper balance for an MMT currency creator, and this is literally straight down the road of MMT ideology, you need a consumer. You need something to suck that capital out of the market. Otherwise, you have hyperinflationary decay. The price point of anything that's being hyperinflated is going to be destroyed. Excess supply. So that's where Convex came in. And this is probably what, August of 2021, where we saw what happens when you get an a consumer that is not questionable. It's not an actor. It's not a market actor that's consuming for purposes of opportunism or capital gains. This is a consumer that's built into their protocol the idea of consuming what is being produced and So Curve obviously has a moat of all moats because of all the consumers. And Frax and Badger are far the leaders in consuming emitted CVX. Um, CVX doesn't have the same narrative as Curve with regard to being a producer. It's different narrative. CVX is really a derivative of Curve in many regards. It's the way Tetranode talks about it is spot on. CVX is basically a concentrated form of Curve. So what do you have? You have the producer, which is Curve. It's an MMT currency producer in all regards from a monetary policy standpoint. You have a consumer, which is convex. Great. It's unquestionably consuming what is being produced. Then you have other pressures that are facilitating the loop. You have other consumers. You have consumers that are unquestionably consuming convex because of the convex narrative that it is a concentrated form of Curve. And what is Curve? Curve controls the direction of emissions. And then you need the pressure that keeps the whole thing going, which is the bribes. And it's all about control and power and the emissions of Curve. Literally, Curve could just print in perpetuity. And literally, this is straight down the road of MMT ideology. They could print in perpetuity. Anything they need, they could print because it will be consumed. And the circular feedback loop is extraordinary. And it's going to be consumed because people want to control the directionality of where what is created goes. And those are the Curve gauges. All about the damn Curve gauges. Producer, consumer, and pressure. And that's what Curve has created with the most extraordinary moat that has been achieved in DeFi. But this is like an extraordinary achievement from historic monetary policy standpoint. No country has ever done anything. They can't do anything like this because they're risking the stability of the country's money system. But clearly, you could do it from the ground up. And isn't that the case always with software? If you have like a 10-year-old piece of software, you can't fuck around with it. But if you create a new prototype, that's what a POC is for. These are like POCs of monetary policy. You know, if a central bank actually had any balls around the world, they'd be doing stuff like this. But they didn't need to because DeFi came along and said, I don't care. I'm going to build some damn awesome software and we're going to experiment with monetary policy. And that's what they created. They literally created the world's first empirically stabilized MMT system. What an extraordinary revelation. Producer, consumer, and pressure. Those who control convex have extraordinary power. Frax has extraordinary power. Badger has, I believe, the second largest quantity of convex. So they have extraordinary power that they're just reorienting. If you follow Badger, they're reorienting, and it's a big deal because they have an immense amount of power. You know, there's a lot of other players, clearly. Redacted's in there, and Abracadabra's in there, and Wonderland's in there. They're all trying to accumulate, but the leaders, once you're a leader, it's hard to disrupt momentum. And Frax and Badger have that momentum. And the only reason Badger might not be outperforming is because they're pivoting. And they had a hiccup with their Web 2 issue. Fascinating, huh? So he who controls the money printer. Woo! Bring it back to TradFi, baby. He who controls the money printer. The power is extraordinary. The only thing, so there's a moat with that. There's nothing changing that. So folks have mentioned that I've trimmed back the CVX CRV position. Great, grand, groovy. Because there's very few reasons to trim back a position unless an extraordinary narrative comes along, and that narrative was the seamless cross-chain interop. Just because I trim that does not mean whatsoever that that moat is disrupted at all. At all. Let me hit some comments and I'll continue ranting and raving about how exciting I see 2022 being. Um, Booster, metals in the house. Booster. Uh, I like AnySwap, but I think they make money hand over fist, but I don't know any. Yeah, it's early. You're very early. I'm thinking of Multi and the new exchange from Danny and Andre, and I'm thinking of where this is heading. So my vision, what I'm seeing, isn't where we are or where we were. It's where it's heading, and I want to own a piece of the cash flow that's going to go through all of the chains. Capital needs to flow. We know the monetary velocity in the crypto space is completely vertical. So we know that carries momentum. We know the capital is going to flow across all the chains, searching out opportunity. I want a piece of that cash flow. How best can I express my interest in that cash flow? Multi-chain. That's it. It's pretty simple. And that's warranted adjustment to the portfolio. So how do I express how I view the entire portfolio? That's portfolio balance. And how has that balance been adjusted? Curve still top of the pack, 24% of the portfolio. It's the money producer. So I want to own a piece of the money producer. CVXCRV just is a capital printer. I want to own the debt system. The system that facilitates leverage and money expansion, basically what commercial banks historically did. They were the money creator until everyone fucked up the system. So how do you do it in the crypto space? Abracadabra is the leader of the pack with regard to money expansion. You got the money creator, you got money expansion. Frax is in the mix as number 3, 21% of the portfolio because they control the money printer vis-a-vis their CVX position. But that's just only the tip of the iceberg. I mean, seriously, what they're thinking of with regard to FPI, and literally just their stable and how they manage their treasury. They're evolving into like a treasury, like an Olympus style treasury. They deploy their collateral. They generate millions and millions of dollars of revenue, and that's how they are able to maintain the growth of their CVX position. So they are the controller of CVX. They have the leading control of it. So they control the curve money printer. It's all connected, and that's just extraordinary. I'm very excited to see what Sam comes up with. So that's number 1, 2, and 3. Curve is the biggest right now. Spell is second. Frax is third. And I've upgraded Multi to number 4, the fourth largest position in the portfolio, 17.39%. So I own the money printer. I own the debt system. I own the controller of the money printer that's diversified with regard to treasury management and potentially a base asset, which is FPI. So that's what he wants to do. And that's that very tantalizing narrative because we think about everything in terms of dollar denomination or stablecoin denomination. But what Olympus introduced was starting to head down the road of rebasing the entire system. How to think of so when you dollar denominated, it gets perverted and you're not able to see the directionality of the system. So I'm starting to think folks would become more and more comfortable over the coming years with rebasing how they view the system, the directionality of the system, which does come into play, Ohm and time and butterfly, but I'm not advocating nor do I have any interest in those assets right now. I I'm starting to think of them as exactly how Olympus originally talked about them, a base asset. which doesn't, I don't see them at all as a spec play at all. I have no interest in owning Ohm, Time, or Butterfly, but I'm starting to see them as like a denominator. Denominate stuff in those assets, and they're going to be relatively stably priced. Everyone sees the 6,000% or 80,000%. That's such a red herring. You'll be lucky if you get 50 to 100% ROI on a yearly basis, in my opinion. And when all is said and done, in 5 years, they're going to be stable as fuck. And you're going to say Bitcoin denominated in Ohm. Okay? That's where this is heading, boys and girls. This isn't heading to Ohm is going to make you a bajillionaire. Yeah, sure. If you got in really early, you probably made a lot. If you got into Time really early, you probably made a lot. If you got into Butterfly really early, you made a lot. Lobus as well. But these things I think are going to get extremely stable over time. And FPI for that matter, when it gets launched, I'm curious to see how that plays out. How about that for some clarity and transparency? You get that shit from BitBoy, boys and girls? I'm just saying. I'm just saying, goddammit. Woo! You know who said that? Who says was the master of the goddammits? That was Rich Piana, old school um, bodybuilder guy. Um, Not a zero-sum game. Agree completely. That's why I love DeFi. The mindset is fortunately rare in our corner of the market. JL, my man. Dan, seems like options trading. DPX, DOPEX. I'm missing a couple, but uh, uh, D, D, uh, there's a lot. There's a lot. GMX. It's a big deal. GMX is hot. The my compatriots are quite hot on GMX, and I would have been too, but I just see it as too much of an isolated concept. I see it as a cash machine. GMX is a cash printer, but it's just options. It's cash flow from speculation, and the reason I'm resistant to that cash flow is because I don't want just cash flow. I want to own infrastructure. I want to own the pieces of the system that are going to have attention no matter what. Now, obviously, options and speculation are going to have attention no matter what, but I want to own the infrastructure. I want to own the capital rails. I want to own the banking infrastructure, the currency producer, the debt system, the money markets, and the SWIFT. That's the deal. So yeah, Dan, that's the deal too. Bitcoin, drip, the manor, BSC. Absolutely nothing on BSC is of interest to me, unfortunately. Um, Maybe that's a little bit of a biased perspective, but that is what it is. And it helps me also concentrate. There's no innovation at all going on in BSC. It's just like literally a degenerate shit show. Can you also explain the breakdown of GMX staking versus potential benefits of GLP? GLP, the design of GLP is collateral. You're giving people a capacity to take leverage. So GLP is designed to be after P&L net stable. So you get a fair amount return on providing that liquidity to people to take long and short positions. So that's cool. But GMX is the revenue generator of the system. So I would say like an ESGMX position is considerable, but you want a solid GLP position to add to prevent dilution of your ESGMX position. So that's the way I was thinking about a position, but I would want a lot. I don't take trivial positions, and I need big conviction, and I don't have, I'm not going to take like, a 1% position in that. I would want a solid, that's a money producer. I would want a solid position, and I just don't have the capital to take the position size I want. You know, I'm like a trout. You got dolphins out there. You got tetrano, which is a whale, and you got folks that are dolphins. What size am I? I'm like a solid trout, or a bass maybe, or like a freshwater salmon. Because you got boys out there that are bluefin tuna, baby. I'm not a bluefin tuna, damn it. um, Dan Tetra says he's working with Danny on the new project Tokenomics on Twitter, so everything seems promising. What I find so fascinating is that all these boys know each other. They all are tight. They all are working and collaborating and communicating. And damn, look at the current daily candle on Curve. Woo, that looks good. Woo, above the 10 SMA, above the 50 SMA, just below the TWAP, and that is looking like a solid candle on a Friday. That looks good. So I love seeing the collaboration. I love seeing these boys know each other and talk to each other and collaborate. Because look at the way Danny talks. Danny talks like he wants to build some serious tech and some systems. Because folks, I love, when he talks, I feel his expression of anger with the suits. And that's something I can appreciate. I'm pissed at these boys. These boys fucked up the system. These old people and these hedge funds and these VCs. It's just fuck them. Fuck all of them because we can do better. The system could be better. And they held on to the legacy system, these ETFs and these stocks and these, it's just gross. Show me some damn technology and some innovation. Show me some courage to make something new, not another stupid credit card or a stupid ETF. They think you're stupid. They think you're stupid. There's the products, the CDs from a bank account. Oh, you need to be an accredited investor because you're too fucking stupid to know what to put your money in. No, get on YouTube. Get on Google, get on Twitter and figure shit out. Follow people that are smart. And I'm not saying I'm the end all be all of information, but I'll point you in the right direction. The only person that's going to help you is you. It's not going to be some money manager schmuck from a Charles Schwab, unfortunately, saying, "Oh, be diversified and get into the index funds." Own some damn infrastructure. Own something that pays you. If an asset isn't paying you hand over fist, it's going to get sold. And it's going to get sold hard. That's the deal. Whew, getting worked up this morning. Live GMX staking. You're exposed to one asset. GLP is a basket of assets. Yeah, that's a good expression. I agree with that. I hope the way I explained it as well helps. I think you have a decent understanding of it as well. It's all about expression. Do you want exposure to one asset, a basket of assets, long and short, so on and so forth? So the P&L on the GLP position balances out, so it's relatively stable. Obviously, getting compensated. So there's your risk versus your risk exposure. You're getting paid for your risk exposure. Hey fam, hey David. Axel actually foaming on DPX. You're very late on DPX. That's very late. Do you think Tribe is like FXS champ? Not on my radar. I don't need to think about it right now. Maybe. Listen, there's always an Uber and a Lyft. Back in the day, there was always a Microsoft and the little Apple. Bear in mind, Apple never disrupted Microsoft. Apple made mobile products, and they did good. They made their mark, the largest market cap company in the world. I don't give a shit how big Apple got. Who do you think owns enterprise software? Microsoft. They freaking own it. They got a moat from here as far as the eye can see. Apple never disrupted Microsoft. Nothing ever disrupts what is entrenched. It's important to remember when trying to understand. Oh, something's going to disrupt Bitcoin. Nothing's going to disrupt Bitcoin. Look at the way I talk about all these assets. There's nothing. I am not a Bitcoin maximalist. I don't own any Bitcoin. There is nothing that is going to disrupt Bitcoin. I'm a technologist. I'm an engineer. I allocate capital to enterprise, shit that's freaking awesome. And even I am going to be the strongest voice in the room saying nothing is going to disrupt Bitcoin because that's the way these systems work. Momentum is everything. Lindiness is everything. All those fancy rules and laws that people reference is everything. Metcalfe's law, the evolution of networks, all the stuff Raul loves to talk about. Man, love his brain. He's got a good brain. Nothing will disrupt Bitcoin. And that sure as hell, from our perspective, the little guy doesn't necessarily make it a good place to allocate capital. That's the no-brainer for a billionaire. It is a no-brainer, and that's where the capital is going to flow. And you'll get your 10x, you'll get your 100x up until 2030. Great. What are you going to do with 100x with $1,000? What are you going to do? All right, fine, maybe $10,000. In 2030, you take 10 grand and you turn it into $1 million. By the time it's $1 million in 2030, how much you think $1 million is going to be worth? It's going to be useless. You're not retiring on $1 million in 2030. So these are the factors to consider with regard to rational capital allocation. Yet nothing is going to disrupt Bitcoin. I got to jump off in a couple minutes. Live, GMX, 100% from bottom of Binance. Yep, entry, Wonderland Phantom. No interest in Wonderland or Phantom at all. I talked about the tech. I talked about the system. I didn't say anything. I'm just not interested in time or Ohm or whatever the hell the asset is, or Butterfly or Ohm. I'm not interested in those assets. I think they're going to be primitives. You're going to see 6,000% return. That's going to get you to buy it, but it's a red herring. I see them as Bitcoin denominated in Ohm in 5 years. That's what I see. FPI, a base, a primitive, the denominator. I see these things emerging as the denominator. There's so much going on in the space, I find it difficult for me to find projects early enough to make a 1% allocation. I understand. And I never said any of this is easy. And I guarantee you, you won't be able to outperform. The odds are against you. The odds are very against you being early. My biggest recommendation is to frickin' play it safe. If you could work at your job and take your money and do a 1% allocation to something that maybe outperforms in 5 years, you've done better than most. For the love of God, if everyone in this room does one thing, play it safe. Play it safe. Most people lose money in crypto. You understand? Play it safe. 90% of the portfolio, play it safe. Literally just stable coins are earning 10, 15, 20%. You're doing better than 90,000% of the people in the general public, because most of them are doing nothing. So playing it safe is better than doing nothing. Be smart. Andre recently made comments about Popsicle. Yeah, it's a big deal. I think Popsicle has some big potential. It's wildly volatile because most people don't understand it at all. Yeah, Popsicle is a big deal. That's I'll show you guys, and I'm going to wrap up the stream. Popsicle is basically one of my core narratives. Protocol managed arbitrage, cross-chain liquidity provisioning and MEV mitigation and capture systems. Literally, I know boys on the Popsicle team, and they talked about JIT liquidity, just-in-time liquidity. That's crazy. That is so cool. I happen to not have an ICE position, but that's okay. That's just because I don't have the position size I want. and that's okay. Daniel has such a huge amount of ice. It's so cool. I love the tech, and just because you love something doesn't mean you have to own it, and that's okay. Own your damn positions, have conviction, and it's okay to not own something you want to own. You got to make some damn tough decisions to construct a rational portfolio. Okay? It's okay to not own something you want to own. It's okay to make tough choices. It's okay to be concentrated. You're not going to be able to own all the solid narratives. And above all, cash flow. That's the deal. Contrarian Badger play, 1%. Love it. 5 years, check back. Sounds reasonable. That sounds rational. I'm going to wrap it up. Thank you very much. Friday, January 14, 12:24 p.m. As always, thank you all for joining me. It is a pleasure every time we get to talk. After party on Discord, basically a little family going on in there right about now. I love it. 24/7. I wish you all a wonderful Friday and a wonderful weekend. Please remain rational. Reach out. Ask questions. The entire Discord family is there to help. We're here to help. The rationality only channel, that's open, that's public. You could just jump into the rationality only channel. And the rest of the forum obviously is a subscription, but you know, it's your choice. It's always a choice, and YouTube is always going to be free. We're here to help you guys to do a little bit better. You have a good one. I will see you on the flip side. Peace.